Hi guys, we have done the first part of the first unit. Now we will speak about the second part of the first unit, that is economics part. Because as you know, business economics and financial analysis both together, BIFA is the title of the paper. When we talk about economics, many of them have heard the word of economics. What do you mean by economics? See, economics is a study of human behavior which speaks about the rational allocation of scarce resources with a given unlimited wants, which are repeating again, that gives you a maximum satisfaction with a minimum sacrifice. This is what Robin said. What do you mean by this? The resources are limited. The resources are scarce in the world. And the desires are heavy. The demand is extraordinarily high. So unlimited wants, unlimited desires are to be fulfilled with the scarce resource. How do you do this? You have to make a rational allocation. When you make a rational allocation of scarce resources, your process of rational allocation must give you maximum satisfaction with a minimum sacrifice. This is economics. So we focus on rationality. We presume that man is rational, human being is rational. So keeping that into account, economics is defined by Robbins like that. So when we talk about economics, we have broadly two classifications that we can make. One is microeconomics and the macroeconomics. Today I am going to explain you the difference between these two. As the name suggests, micro is a minute, small, unit level study of economics. Macro, as the name suggests, the scope is extended beyond one unit. It is extended to a nation, to a state level. So that is the broad difference. Let us look at the difference between these two. When we look into the microeconomics, it is derived from Greek word micros, meaning small. It is a small unit. Microeconomic studies the economic behavior of individual economic units and individual economic variables. If you are studying about a firm where you are going to be an engineer, that's called micro. If you are studying about a nation or if you are studying about a state, we say it is a macro. That is a simple logic. The study of economic behavior of the households, firms, industries forms the subject matter for macroeconomics. So microeconomics. The microeconomics is concerned with economic activities of individual economic units, consumers, resource owners, business firms. So you are always studying about a human behavior. Suppose one individual, how he behaves like a rational man. If you are studying, it is called microeconomics. If you are studying about the consumption pattern of one consumer, it is a micro study. If you are studying the economic behavior of one industrial unit, then we say it is a micro study, like that it calls. It explains how these individuals as consumers, households, resource owners and producers play their part in the working of the whole economic system. It revolves around the interaction of consumers and producers. What is the interaction between these two? Is mostly there. So when we talk about the subject matter of microeconomics, the microeconomics is concerned with the product market, factor market, welfare economics. So when we talk about product market, you have 1, 2, 3, 4. One is theory of demand, theory of production, theory of cost, theory of product pricing, you have. What do you mean by these four? This is demand. That means what will be the estimation of your demand so that your products can be sold. So to estimate the demand, you need to study the behavior of consumers. So that is the microeconomics part of it. Theory of production. How do you produce? What is the relationship between inputs and outputs? Production function. Those things will come under the theory of production. Then theory of cost. How much money you are going to invest? What is the cost involved? What is the long run cost? What is the short run costs? And ultimately what will be the output? Based on the cost as well as the demand, we always make a theory of pricing. See, if you make a cost plus pricing, then that may not work out in some cases, because consumers' perception is different from what you think. Consumers may perceive your product to be a useless product if your pricing is too small. So you make high pricing there. So what consumers can afford and what consumers expect matters a lot in product pricing. That is marketing side. But economics point of view also, we always look cost plus pricing, marginal cost pricing, or markup pricing. Like that, you have different pricing systems. When it comes to factor market, we look to the theory of distribution. When we talk about theory of distribution, we are talking about to the factors of production. How do you pay? You pay rent, you pay land for rent for land, the wages for labor, and you pay the interest for the capital and profit for the organization. So that will come under the theory of distribution. Welfare economics speaks about the subsistence theories and how do you subsidize the product so that the demand can be raised and thereby demand can be improved. So these are all called subject matters of microeconomics. When it comes to the microeconomic deals with this, deals with the determination of product prices. How do you determine the prices? How do you determination of factor prices and their quantities in the individual market? The allocation of resources among the various firms. It deals with the action and interaction of individuals, product and factor markets. So whatever I have already explained, we have put it in the form of a diagram. So price can be fixed based upon the quantities in the individual markets and allocation of resources to the different firms. Then comes, we will now discuss about macroeconomics. Macro means, as per the Greek word, large. So you are discussing about the large economy. So macroeconomics is a study of economy as a whole, entire country's economy as a whole we discuss. So macroeconomics deals with the functioning of the economy as a whole. So you talk about the prices, you talk about unemployment, you talk about inflation, you talk about fiscal policies, you talk about monetary policies, you talk about export policy, import policies, all those things will come under this. So it deals not with individual quantities as such, but with aggregate of these quantities, and not with individual incomes, but with the national income, not with the individual prices, but with the price level, not with the individual outputs, but with the national output. One important point we must understand is, as an engineering student, how these things are relevant to us. That is important. When you join as an engineer in a particular firm, you need to understand the economics of that particular unit where you are working. Suppose you are appointed in Reliance or you are appointed in some company, you need to look to the economics of that particular company. And you also need to look to the external environment of the business. Unless you understand the impact of external factors like change in the stock markets, change in the oil prices, change in the inflation, change in the government policies, change in the export-import policy, you cannot assess the demand of the products which you are manufacturing. You might think that all this job will be done by economists. Why should I bother? Yes, you don't have to bother if you are confining only to the engineering job at lower level. But nobody would like to stay at the lower level. Today you may join as an engineer. After 10 years or 20 years or for 10 years also, you may get promotion as a manager, or you may become a lead, or you may become a MD. In such cases, you must have a broader perspective of this one. So fundamentals of economics are learnt by you at this stage. So this is macroeconomics. So when it comes to the subject matter of macroeconomics, theory of national income, theory of output and employment. National income means what is the total income of the nation, which we will discuss as a separate topic. Theory of output and employment, how much output you are producing and what is the employment you are generating, because unless you generate the employment, you cannot think about it. General price level, if the general price level is high, then the consumer will not be able to buy the product. Economic growth of the country, international trade, exports and imports, theory of money, all these things are covered in the macroeconomics. So if you want to know the difference between these two, this deals, macroeconomics deals with individual economic behavior, this deals with aggregate economic behavior. This deals with a particular commodity in an industry, this deals with the price level, economy, national income, accounting, etc. This deals with the basic parameters are required. Price is the basic parameter in economics, microeconomics, and income is the basic parameter in the national level. And you find study of microeconomics is important for resource utilization, public finance, and for taking business decisions. These are all you talk within the firm. Within the firm we look into it. When we say public finance in respect of economic firm, we are talking in terms of how do we get the money from the public finance, whether the government gives some funds, number one, whether the government tax policy gives some incentives to us, tax holidays it gives, those things, how they are relevant here, we will study here. Whereas study of macroeconomics is important for formulation of the policy itself. So this completes the part of it. So micro and macroeconomics, if you look, these are the concepts interdependent on each other. This is independent. Concepts were popularized by Alfred Marshall. This is popularized by J.M. Keynes. And this is a theoretical, it has concepts have more theoretical value. This has more practical value. Bottom up the view economy and top down of the view economy. It comes from the part. So this completes the part of it, and importance of this, when we look into it, functioning of the market economy, allocation of resources, price determination, economic efficiency, all these things are useful to the economics point of view. So this is the importance of the macroeconomics, understanding the working of economy, understanding the major issues of the facing, study of national income, insight into the microeconomics, usefulness formulating government policies, international comparison. So macro and micro, if you know the difference, that is enough for you. Thank you.